Today's pullback has stocks bouncing up against some key levels for the market. So where are we headed next? Let's bring in Katie Stockton of Fairlead Strategies to break it down for us. Katie, you say that the momentum is to the downside. What do you see in the charts?
I mean, that's really the most important takeaway, is that a correction definitely has a hold on the market from an intermediate term momentum perspective. That means that MACD indicator, which is derived from moving averages of price, is pointing lower and it's still diverging. So that reminds us not to be too early in trying to find that tradable entry point or intermediate term low. That we have seen some oversold conditions return, but not yet for the S&P 500 index on an intermediate term basis. It's very, very close to intermediate term oversold, but not quite there yet.
Are there sectors in particular that look like they're there versus others?
You know, I would say on the sector front, we've seen very classic defensive rotation. We've seen outperformance from the likes of consumer staples and more recently healthcare and utilities. And that is not really the stuff of a strong tape as you could imagine. From a bottom up perspective, though, if you look at some of the high growth names, they are deeply oversold. And that's not even just intermediate term, but also long term. So if we're looking for opportunities right now, which we're not really doing that on the behalf of our clients, but rather we're just kind of watching and waiting for the major indices to bottom. But for those that are interested in sort of building a list of names to add exposure to leverage the next relief rally, I do think that they can source some of these names that are long-term oversold, the ARK-K type of names out there that have just been trending lower, not just since January, but perhaps for several months.
Katie, when the S&P 500 was making a new all-time high, I want to say in January, I might be off, the Nasdaq couldn't do it. As a matter of fact, some technicians would look at that in a bit of a double top. I think actually the Nasdaq looks worse than the S&P. What does your work tell you in terms of that?
We have seen relative strength deteriorate, as you could imagine, behind the Nasdaq 100, which is so tech heavy and mega cap weighted, versus the S&P 500. It's not a dramatic breakdown in relative terms, but I would agree with you. We have more breakdowns in those NDX components, and the momentum's a little bit worse. You even saw that today. I think the Nasdaq index was down 2.6%. taking out that January low, which is just a minor support level. The levels that we're watching are very much in play as we speak. So for the S&P 500, about 4,200 is a support level that we've been watching for some time. It was effectively tested successfully in January, and now this retest looks like it might be unsuccessful, and that means we see a short-term breakdown. We already seem to have that in the Nasdaq 100 underway, and that just suggests that we have a little bit more room to the downside for follow-through before we get that tradable low. And you all were just talking about sentiment, and that's really important. Sentiment does need to get overly bearish at times to get us that low, and I'm afraid we might need another downdraft, even potentially some kind of gap down to get to that point where sentiment is really washed out. And that's the stuff of those lows.
Katie, what scares me most when I look at the charts, and you've talked about kind of the duration of where we sit in this mode, the Nasdaq has traded below the 200-day now since mid-January. We haven't really had an extended period like this. And if you look at the slope of the line on the 200-day, it's flattening out in a hurry. We haven't had a downward sloping period in the triple Qs since 2016. Does that worry you? Is that a place you think we can go? Because that would take out a lot of long-term momentum.
That's right. So what you're seeing is that long-term momentum shift, and it started to manifest a little bit in Q4 of last year. We look at the monthly MACD indicator to that end, and we do have a sell signal in that indicator for the Nasdaq 100. It's a very long-term gauge, so it doesn't really mean anything for the very, very near term. But what it does tell us is that we're in a different kind of environment. So I think at best, we're probably in a trading range environment for this year. If you make a comparison back to 2018, it's pretty reasonable from a technical perspective to suspect that we'll see a year that's very similar in its nature, where we see a first downdraft followed by a mid-year kind of relief rally that's very tradable in nature and very important for folks to take advantage of if they're trying to beat the market, and then another downdraft into year end. That could be a good playbook for this year based on that loss of long-term momentum that you do cite. And it just tells us we have to be a little bit more intermediate term, I think, in our time horizon, trying to take advantage of, say, maybe the next 2 to 3 month move as opposed to the next 2 to 3 year move.
Katie, great to see you. Thank you.
You too. Thanks.
Katie Stockton of Fairlead. BK, just quickly before we move on, I mean, a gap down lower, a big washout. If we haven't gotten it so far based on a lot of these headlines, I mean, I can't imagine what's going to get us there.
Right. That's the real question, right? But that would be exactly what I'm looking for a buy signal. You gap lower, reverse higher. And to Katie's point, even if this is a bear market rallies can be pretty vicious and they can be great tradable lows.